Let me tell you the secret that has led to my goal. My strength lies solely in my tenacity. Louis Pasteur. Tenacity, that is persistence, that is dedication to achieving what it is you want. And for us, it's accurately following price movement. We don't care what they're saying on the news. We don't care what the pundits are saying. We don't care what the financial press. We don't care what we think is going on. We care what the price is telling us. And we team the price up to make it even more unbeatable with the volume. Volume is so important to see it with price. Again, when you learn how to read volume and how you read price, and you can put those together and see the patterns in the Heikin-Ashi candlesticks, my friends, you will find yourself getting better and better and better. Do the charts always tell you what's going to happen? No, you will not always be correct. That is why the second thing you have to understand and you have to practice is we use our average true range on the 2-day chart to help us set our profit and loss bands. At 1 average true range for loss, 1 for our profit. The minute we hit that profit band at 1 ATR, 1 average true range over 14 period on the 2-day chart, we sell half our position and let the rest of it ride. If we take a position and it goes in the opposite direction, either up or down, whether we're going long or short, we then, when we hit that loss parameter, we jump out, we take our loss, and then we wait for the next good opportunity. That is how you let your profits run and you cut your losses. So again, teaming these things up intelligently. And how do you learn all this? Don't fret that. Just start listening. Just start taking the trainings. Just start practice trading. Just keeping up, saying, hey, I'm going to enter here and I'm looking for this to happen. And then as you get better at it and as you take more of our trainings and you listen more and you pay more attention, all of it will slowly come to you. Don't panic. Don't think you have to do it overnight. And then people say, but I don't want to miss out. I don't want to miss out. I don't want to miss out. Fear on missing out has led to more gambling in the market than anything. You know, and I tell everybody, every time you hear all the gold ads, this is a great example on TV. When you hear everybody saying, buy gold, buy gold, buy gold, you know that gold has hit its interim top. It's just about to roll over. It seems like that happens every single time. You can watch the charts. When everybody's telling you to buy gold, it's typically the time you sell. Now, again, that's because they're following the crowd. You want to follow the price and the volume. So let's jump into these charts. What do we see happening with the S&P 500? I'll tell you, stocks are down. Everything else in the market is up. Now let's first look at the S&P 500. What do you see here on the weekly chart? Going up, going up, going up, going up, and breaking through the weekly trend line. Now we still have a very small green candle. We are, and again, this is the first day of this shortened week thanks to President's Day. And what do we see with the volume? We see the volume's low. It's red. That doesn't mean that we have negative volume. It means that the opening was below the prior close. That's all red means. Green means the opening was above the prior close. That's all that means when it comes to volume here. But it can be helpful in, again, teaming up and giving you a signal. Now, how do we see this 2-day chart? Well, as we look at the 2-day, this is the Friday, Tuesday, we can see we have a lot of volume there, and we have a spinning top, almost a doji. We actually have 3 spinning tops. That's showing a lot of indecision over the last 6 days. We've broken through the trend line for now on our weekly chart. Doesn't mean things aren't going to turn around over the next 3 days. Look at what's happened. Now, again, you can see we had a down move on Tuesday morning and afternoon on the 13th last week, but then things moved up from there, and then they've now moved down again. Now, we didn't break candle-wise through that weekly trend line on the half-day chart. We did in the morning and further in the afternoon here, so we're paying attention. We're not all of a sudden going short, but we are paying attention. Now let's look at where we are on the NASDAQ 100, the tech stocks. We see more of a drop here. We've blown through this weekly trend line. We can see a doji, red doji, not a green one like we saw on the S&P on the 2-day, and look at all that volume. And then we, of course, had it moving down on Friday, and then on Tuesday, dropping down in the morning, staying below in the afternoon. The NASDAQ 100 down 0.75% as per the S&P down 0.55%. So warning bells are going off here about potentially closing our up trades and looking for potential down trades, going short. Now you might say, Tom, how do you go short on the S&P and the NASDAQ 100? Well, you can look at things like SH, which is, again, the ProShare short. It actually goes up when the S&P goes down, and when you look at the NASDAQ 100, PSQ. These are short funds. Means when the underlying asset, in this case the NASDAQ 100, goes down, it goes up. Now the fees are higher. They're rebalanced every day. They're reasons you should practice, trade them, and learn if you like them or not. Typically, the losses can be magnified if you don't know what you're doing. And again, that's the whole reason you practice all this stuff without money. We're not a stock calling service. We're an education firm. We don't give market advice. Let's jump into 20-year bonds. Where are they? Well, they're up a little bit for the day. But again, you can see where things sort of bottomed out here on Friday morning. And again, moving up a little bit on Tuesday, 0.09%, so less than 0.1%. And as we look at where things are starting this week and we redraw our trend line here, it's looking like a pretty flat trend line. Trying to get, it doesn't seem, let's see if we can, there we go. Well, it's looking pretty flat on the 2-day. That just looks really weird. Let's make sure, that's just looking odd. Doesn't look like it ought to be that flat, but I guess it is. Now we have a red down candle forming, hardly any wick at all there on the bottom of this. Don't let this dashed horizontal or vertical line fool you, nor the horizontal. If we move to the side and you look here, it makes it look like there's a move on the bottom, but as you look, you can hardly see one. So again, well below the 2-day on the 2-day chart and the half-day chart below that weekly trend line. So we will keep an eye. Stocks up just a little bit. Now we go to gold and we can see we've got a green spinning top on gold where the wick pierced the weekly trend line. We can see on the half-day where things popped up and then sort of moved back below it in the afternoon. Overall, though, up 0.61%. Green candle forming here, but not breaking the trend line yet. So let's just keep a close eye on gold and see if it's going to continue that down move. Of course, we had average volume where we touched, again, reached up and touched that ceiling that we've seen gold hit on several times. And with all that volume, we then didn't have a strong down move the next week, nor a lot of volume. We almost had average volume down last week, but again, not the typical way we want to see things. We want to see things peak with higher than average volume and then roll over with just a red down candle like we see here and high volume, which we didn't have. And then we feel better about, that down movement continuing. So we'll keep a close eye on gold. Now, what about Bitcoin? Well, the HODL, which is the Bitcoin, the new VanEck Bitcoin Trust ETF, we see 0.09% up for the day. Not a whole lot. Now, when we look at 24-hour-a-day Bitcoin, we see something different. We see in the afternoon and here in the evening where Bitcoin was recovering and moving up, which again depends on how all that moves through the night. But as we look at the 2-day, again, we see things again continuing to try to percolate up well above that weekly trend line. And I keep explaining over and over why we're looking at 24-hour-a-day Bitcoin versus the new Van Eck Bitcoin Trust ETF. And the reason for that is it's very short-lived so far. They closed XBTF, which we worked on and practice traded for years with the advent of the new spot Bitcoin ETFs. So we still don't have an average. We have a bit of an average here. When you look at volume, you can see this black line. We're getting a little bit there, but not a whole lot. We don't have yet 20 because our volume indicator is 20 periods, and we don't have 22-day periods yet. We're very far from that in the weekly. So what we are doing is balancing off what's happening on HODL, the Van Eck Bitcoin Trust ETF. We're balancing that off against 24-hour-a-day Bitcoin. So again, saw a big down move in the late morning, early afternoon on the 95-minute chart, and then things turning around as we got late into the day, and it doesn't look like that's been reflected because, again, Bitcoin right now up 1.12% on the 24-hour-a-day Bitcoin. We say on HODL isn't reflected yet. It's just up 0.09%. But again, things moving in the right direction, not hitting the prior high yet. And as we look here, we can see the high last week, 52,884. This week, high 53,15. So again, reaching a bit higher high here. So we would expect during the day tomorrow, and again, if there's not a big down move overnight, we'll probably see HODL catching up with that. So we'll continue to keep an eye on things. Again, Bitcoin moving in the right direction. We'll just continue to monitor and, again, stay in that practice trade as long as it's looking good. Thank you so much for being with us, folks. Always love to hear from you. CW@chartingwealth.com. God bless. All the best from the whole team at Charting Wealth World Headquarters.